We appreciate you listening and maybe participating in Invest Talk, and more of our new podcast listeners are calling in with their questions and stock ideas. That's why we're here. And if you can think of us as a sounding board and we can place some information in your hands, we'll feel satisfied. We want you to feel comfortable, too, asking your questions here. You can do that two ways. Use your phone. Call our anytime line, 888-99-CHART. That's 888-992-4278, or go to investtalk.com. That's InvestTalk with two T's, investtalk.com, and click on Contact Us. And thanks again for listening to Invest Talk. Welcome to our 1-hour meeting of the minds about money, your money. This is Invest Talk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, here's registered investment advisor Steve Peasley.
Good afternoon, everybody, and welcome to Invest Talk. This is the Friday edition, February 20th. The February 20th edition of our program. And, of course, we always welcome the AMA 60 listeners, podcasters, investtalk.com, and all those people who listen to us. We appreciate it. I appreciate it. I sincerely do. Now, my mission, simply stated, is to help you minimize risk to your invested dollars and to help you position yourself to take advantage of the market turn. Okay, the market is in a downtrend. It's going to stay in a downtrend. It has been in a downtrend for a year, more than a year. And the question is, when will it turn? No one really knows, but there's going to be a turning point. If you are in the market, it's already too late to get out of the market. How far down will it go more? I don't know. No one really knows. But especially if you're dollar cost averaging in the market, do not stop now. Do not stop now. If you're out of the market or you have a lot of cash on the side to put in the market, well, just keep your powder dry. There's no reason to jump back in yet, but I think we're getting close to an inflection point. We may go down another 5%. By the way, that could be in one day. We may go down another 10%. That could be easily in a week. It was down 6.5% this week. I mean, that's how bad the market was down this week, 6.5%. That's huge, percentage-wise. So how am I going to help you? How can I help you? The market is scaring droves of people away. Fear is rampant, and that's driving stock prices down. Stock prices haven't been, you'll find people arguing about this, but I think stock prices are very, very reasonable, based on historic norms. Very reasonable. But some people, and it's very tense. Some experts say, no, the stock market is fairly priced. I don't see too many people, I haven't seen anybody saying that it's underpriced. Well, remember, what they're thinking about is future earnings. They're looking at future earnings and say, okay, earnings are going down. Okay, profits are going down because of the economic recession. So they're trying to extrapolate what the profits will be for this year. You know how difficult that would be? It could be way off, up or down. They don't know. I'm looking at it more, what is it doing right now? What do we think it's going to be right now? What is the PE ratio today? And, can we extrapolate that into the future a little bit? And I try to do that. And our average PE ratio is around 10-11 right now. That's historically low. Now, if the E part goes away, and usually in a recession, the E part does go away, the earnings, PE ratios skyrocket because earnings go away. Well, we're not having earnings go away. We're just having much less earnings, much less growth of earnings. And in certain industries, of course, dramatic shrinkage of earnings like autos and banking and housing. But we'll see. Now, columnist Jim Juback, he's a writer that we put on our investtalk.com a lot, his articles, because I like. He's been around many, many years, and I think he's a very smart guy. He makes a lot of sense. He writes for MSM Money now, and he sees signs of spring in our economic winter. Okay, he says, Between some of the worst financial panics in history, U.S. capitalism built transcontinental railroads that today carry freight under the names of BSN and Canadian Pacific during those economic panics in history. And just so you get some perspective, in 1931 to 1933, the stock market rallied 300%. Remember, the recession, the depression went from 1930 to 1939 till World War II came along. So even in the worst economic situation, at some point, when the stock market has been beaten up so badly, there's going to be a rally, and it can be very, very large. But no one knows when that point will be. No one knows. So what's going on? Okay, in the worst economic recession, we built railroads. We built a lot of stuff. What is Obama in this economic recession trying to do? Well, how about high-speed communications? The internet. What companies will benefit from that? Research in Motion? Cisco? Who? And how about the giants of stores like Walmart? What did they do in this economic slump? Their stock is moving up. Why is that? Because people are moving away from typical grocery stores, going to the cheaper stores. Anyway, it's a very interesting article by Jim Juback, and it's on our website. You can take a look at it, investtalk.com. We have a link to the article. It's under the features section right there. Now, today we're going to talk about managing your money in a volatile market, but how to stay in the market as best you can. What kind of equities should you be buying in this kind of volatility? And as a resource, we refer you to an article at Investopedia, Tips for Investors in Volatile Times. So we'll be leaning on that a little bit this afternoon. So what's on your mind? Our job is to answer your questions and give you information, feedback. That's my job. I want to do that. I am here for you if I can help you. Now, I don't have all the answers. If I did, that would be wonderful. I would love it. I don't know for sure, and I go through the same struggle as you do. Don't think all money managers do. I mean, you'll hear a lot of money managers talk all positive and how great they are. Look, it's hard work. It's difficult. It's very difficult. We work hard at it at KPP Financial. We look at everything every day. We try to determine what direction we're going. It's very difficult. And don't think we don't get stressed over it. We do. One of the reasons is because my money is right alongside all my clients. I don't want to lose my own money either. I want to preserve what I can. I know in the back of my head that in the middle of an economic slump, the stock market is going to start rallying. I also know from previous economic recessions that rallies can be very, very large and very, very quick. And so you're torn between let's get out completely, let's stay in. Where should we stay in? How much should we have in cash so that we, don't go down with the market, but at the same time, you need to be ready to jump in or be in. All that goes through our minds. Jerry Klein, the founder of KPP Financial, around 45, 50 years, this is a typical struggle. He said it's not unusual, it's hard, and you really have to keep your wits about you in this kind of environment. So what are you doing? Now, why don't you call me and we'll talk about it. The lines are now open. The number is 888-99-CHART, 888-992-4278. Now, the stock market today, what did it do? Today was triple witching hour, by the way, so volatility